Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over the market. Let's go over what has happened to Tesla today. Sorry, I'm just pulling up something on the side screen here while I'm talking. But yeah, as usual, let's go over the market. Let's talk about Tesla. Essentially, what has happened and what we can expect moving forward for the rest of the weekend. Honestly, even for the rest of the month. But with all that being said, if you enjoyed the video, don't forget to hit that like button. This is not financial advice. Make your own decisions. Do your own research. And of course, guys, if you want to join, don't forget I do have my member course. I keep saying course. My member section now live, where of course I'll be posting intraday thoughts on Tesla as Tesla moves. Whenever I think there's anything meaningful to discuss, of course, and I will, constantly be doing that. And it's only $2.99 a month. The link is down below in the description, or you can press the join button and you get access to that. And yeah, so far people have been liking it quite a bit, so that's always nice to see. But nonetheless, moving right into it, Tesla closing in about 18 minutes. Had to record this one a little bit early, but nonetheless, we'll be closing somewhere around this 1% ish mark to the downside, which will be putting us at about almost $184, 183.8 or so, which isn't too bad. But let's discuss it. What does this mean moving forward, right? Like, is this bad? Is it over? Like, are we going lower? Are we going higher? Like, what's happening? What can we dissect from this? Well, let's talk about it. So, we talked about yesterday how the daily candle was extremely bad, right? It was extremely bearish, right? This was an exceptionally bearish daily candle. This is actually a pretty decent daily candle today, actually. This little daily candle we see. I mean, there's still 18 minutes. This definitely can change, but as it stands right now, not a bad looking daily candle here. Showing a lot of indecision. We had some FOMC meetings today as well. So, brought a little bit of volatility to the market, but there's very important things to talk about here. The first thing, before we go back to Tesla, before we continue with Tesla, is the VIX. I really want to quickly point this one out. Extremely important. Now, we talked about yesterday how the VIX broke through, right? This candle right here. We talked about how the VIX, broke above this resistance that it had a lot of issues with, right? Or like 18.2-ish, give or take, right? And then, today was another example of follow through on that. I mean, again, as the VIX rockets, not always, but more often than not, like 8 or 9 out of 10 times, the market's probably down, right? So in this case, perfect example, the VIX rocketed, the market is down, Tesla's down, the market's down, but is getting rejected at this level, 20 level. I think I talked about it as well. I think it was either here, it was this one or here, right? That was yesterday's post, right? We talked about how it's finding some life. Two things to get interesting if it breaks 20. It did break 20, but more importantly, it's not closing above 20. We've always talked about that, right? It's not always about the break. It's always more importantly about the close. The longer the time frame of the candle that closes above or below a certain level, that's a crucial level, in this case 20, or like very low 20s, like 20 point something, the more weight it holds. You know what I mean? So because in this case, it's once again getting rejected by 20 and it's just having issues closing, that to me shows a little bit of weakness for the VIX, which on the bright side can show a little bit of strength for the market. Also, extremely quickly, I want to talk about SPY. Very interesting candle here. So, not a bad candle itself on the daily, but the fact that it's arguably breaking below, below the daily here, where the option on the daily here is not a good sign. That could be bad. This could be a false breakdown. We'll see, of course, but so far this could be a little bit suspicious. So just keep that in mind. This is definitely not a good sign for the market, the broader market, but we'll see. We'll see how it moves forward. Just keep that in mind. That is extremely, cautionary, if you will. Now, talking more specifically about Tesla, we talked about how this candle is bad. However, we are talking about now how this candle today on the formation is not too bad at all. Actually, in fact, a pretty decent looking candle. Now, we ended up plummeting down all the way to the lowest was around, let me just move this candle over like this and it'll tell me the low, 178.22, right? We talked about yesterday how we'll probably go somewhere around the mid 170s. Now, the question I'm sure people are wondering, is this good enough, right? Is this low enough for the bounce that I talked about? How we'll come down to the mid 170s, maybe consolidate or so, but probably from there, ultimately, I think it'll be a bear trap, and I think we will rocket back up, probably closer to about 200. Maybe for lucky, we'll go over 200, but somewhere in the high 190s, give or take, 200, let's say, I do think is very possible. Now, is this low enough? Well, we talked about it yesterday, and the question is, can it go lower? The answer is. I think so. Now, we did bounce roughly, again, this is not the most perfect Fibonacci in the entire world, but it's good enough, right? But we did get extremely close to the 0.382 level, and we are bouncing decently well off of that so far, but we're still in the red and we're still below yesterday's close. So the way I look at it is as follows. Do I think it can go a little bit lower? Yes, I do think it can go a little bit lower. I don't think it'll be that much lower than this though. So to me, like if you're waiting for like 175, but you decided to just completely ignore 178 as opposed to scaling in, that to me is a mistake, right? Personally, I have entered a bullish position when it was around 180 actually, and I would have entered more if it went even lower, but 180 to me was like the first level I wanted to enter, and I would have entered at like 174 again if it came down to that level today. It didn't, so that's why I'm glad I did enter a position so far, right? So I'm not completely missing out on this nice little bounce, but nonetheless, basically I wouldn't be surprised if it comes down to this little blue line up to going to the top right over here, this one up and down, right? Which again, from here, maybe we'll put us somewhere around the mid 170s, so like 175, give or take, of course, right? Give or take. It doesn't have to be exactly, pinpoint 175. It could be a tiny bit lower, could be a tiny bit higher, but that is essentially what I would not be surprised. To me right now, this looks like a very small dead cat bounce, right? And the fact that we're still below the close, the close on yesterday's candle essentially, or yesterday's daily closure, if you will, which is what, around that 185.79 level. To me, that's acting as a resistance. So what I personally wouldn't be surprised is if we come up to this level resistance, probably get rejected, make our way down a little bit further, come down to somewhere around that mid 170s, like, 175, 174, something like that, closer to this teal line is essentially. There, I think we'll get a bounce, and I think we'll get a nice little bit, again, not a straight line like this, obviously, maybe some, some zigzags in between or whatever, but ultimately something like this of a move back up to maybe 200. This, of course, would imply that we break above this massive blue line over here of resistance, which, is interesting to say the least, because I personally believe once we get this little rally down and we go back up to maybe 200, or at the very least, maybe a double top here around, 192 or so, right? I think that from there, we actually will ultimately go lower, which feels weird to say because we're breaking, assuming this happens, we will be breaking above this massive resistance above. So that's the part that gets a little bit confusing in my opinion, because if we do go up here, Tesla will be pretty overbought. Now that doesn't necessarily, it's not always a bad thing. Just because a lot of people get RSI confused, just because something is overbought doesn't mean it has to plummet right now. It absolutely can, but it doesn't mean it has to. Things can stay overbought for a while. And usually if it's overbought, that doesn't always mean that, it's a bad thing right away, because it does mean that the buyers are arguably in control. And on top of that, usually what I look for the RSI for is a divergence. So if we get an overbought signal here, so for instance, as an example, this is a perfect example. If let's say we do go to 200, right? Let's say we do this, just an example. But let's say the RSI here goes to maybe 71 like this, and it stops here, right? Something like that. That right there is a beautiful bearish divergence, because as the stock is making higher highs and higher lows, this right here will now start making a lower high, even though the stock, of course, went even higher. So that's important to understand. That's something that I personally use the RSI for, and that's what I personally look forward, or not look forward to, I guess, but look for in terms of, determining the trend. So that's the way I kind of do it, right? So just keep that in mind. But regardless, for now, what I personally expect to happen is most likely a rejection at yesterday's close, which is again is almost at 186. Most likely get rejected. Most likely fall back down a little bit lower. Maybe 178 again. Maybe all the way down to actual mid 170s. Probably get a nice little rally from there, and at the very least come for a double top around 192. Maybe go even higher for a pretty massive bull trap up here. I personally believe. Could be completely wrong, of course. We'll see. We'll have to take it step by step. But as of right now, that's my current projection. So. So also want to take a quick look at something else. Let's go ahead and delete these lines here. Let's go back on the daily here quickly. Again, beautiful looking candle. But let's take a look at the 21 EMA right below us. So I honestly wouldn't be surprised if we come down to touch it roughly. By the way, also important to note is if we do go below this teal line right here, that to me is pretty bearish. And if we go below pretty much 173 to 170, right? 173 is where it starts getting a little bit sweaty, but if we keep falling below, that's, it's not looking good for the bulls there, right? Very important to understand that. And the reason for that is because not only do we break this uptrend on the teal line, but we also come back into this area of, what was it? I'm like blanking on the word right now entirely. Essentially, we just go sideways. I'm like completely blanking on that word right now. You know what I'm talking about, right? Where you get this, area of just like convergence. I don't know. What is that word, man? How am I just completely blanking out on that word? I use it all the time. Anyway, but yeah, the point is that, when you get this like sideways action like this, right, and you finally break out, if you come back down and retest that, that's perfectly fine. But if you come back to retest that and fail, that's not good. Similar to when we had that bear flag. Remember I talked about the bear flag? We came up to test it, but then we actually went back in, and now we have this rally. Same concept, just flip is true as well. So that's very important for the bulls to understand. If we go back below that level, not so good. On top of that, let's go over to the Bollinger Band. You can see we're still pretty close to the green line, not too far from it now, but you know, I still wouldn't be surprised if we come down slowly to the white line overall. But as the white line catches up to us, which is why I don't think it'll happen tomorrow necessarily, I think it'll meet us somewhere around the 173, 174-ish level potentially, right? So that's kind of what I wouldn't be surprised at. 100-day moving average sitting beautifully at that 174 level, which is the level we just talked about. 50-day moving average is exactly where we bounce right now. So that, again, this is a level to bounce. This is what I talked about today. How, you know, 180-ish is the first level to bounce, give or take. But then the next level is, of course, the mid 170s. And if we fall below 170 to 173, well, that's not a good sign. So again, this is a pretty nice level. Right, about 180. It's around 178.5. Beautiful level to bounce off of the 50-day moving average, and that's also very nice to see. So yeah, all in all, guys, Tesla not looking too bad right here. I definitely wouldn't be surprised if there's a bit more downside. The hammer candle is starting to fall apart a little bit as we go into close. This is a little bit too much of a wick here, so that's not ideal. But again, wouldn't be surprised if we do ultimately potentially still come up here, get a rejection, most likely come back down, bounce, and then we'll see what happens from there. At the very least, I think we'll get a double top. If not, maybe go even higher. But that's what I'm seeing, guys. That's what I'm thinking. Let me know what you think down below. If you enjoyed, don't forget to hit that like button. Don't forget to check out the membership section as well. If you are interested in that, it is there for you. But all that being said, thank you all so much for watching, and I'll see you tomorrow. Peace.